what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
All right, good morning, everybody. Happy Monday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. I've got JC Parets. I've got Steve Strazza. I've got Chart Wizard Alfonso backstage, whipping up charts as we speak. We got a lot going on this morning. We got some charts to discuss, obviously, some favorite charts for the week. We do have some headlines as well, some news. Our guest today, featured guest, Jon Kolovos, head of technical strategy at Macro Risk Advisors. We'll have Kimmy on as well. No Sean today, so just John and Kimmy and us and you. So welcome. Good morning. Good morning, Mike, Curtis, Mary, Joe. Good morning, everyone in the chat. If you want to hit that thumbs up, I'd appreciate it. Let's roll. It's a morning show. Hey,
Mr. Spencer Israel. How's
Yo.
everybody doing today?
Doing all right.
I go to sleep early these days, so I didn't watch the Giants lose to Buffalo, but it was a lot closer than I thought it was going to be, huh?
Yeah, I mean, they should have won. Buffalo
Really?
has this problem where they just don't show up sometimes.
They have this problem where their quarterback throws a lot of interceptions, especially when at the most important times. So there's that. So they're not going anywhere. On another note, I am on a 20-hour fast, by the way.
wait.
That's not really a fast. That's like I forgot to eat lunch and dinner yesterday.
No, I had a big lunch on purpose, and then here we are going on 20 hours. No?
I'm going to be doing another one of my 36-hour, not my 36-hour, but a 36-hour fast starting tonight into Wednesday morning. I think.
Look at us over here, health guys. Yeah. Come on, Strazza, you taking notes? Me and Spencer over here? Come on.
Yeah, maybe one day I'll join you guys.
Yeah,
Listen,
I think it starts tonight.
Shout out Phil Perlman, has been a great influence on a lot of us. Some of us listen more than others. I'm not perfect, far from it, but I do the best that I can. I've been doing pretty good lately. Pretty good.
Proud of you.
I'm a little bit proud of myself. Not gonna lie. By the way, happy anniversary bull market. I know it was last week, but we got to crunch some numbers. Why don't we talk about it? Spencer, hit it, baby.
I like number crunching.
How come no one liked my idea of celebrating last week, and now all of a sudden we want to celebrate a day late?
Because we got weekly data now, B.
All right, he's ready.
All right. Feeling good. So let's talk about something, Mr. Strazza. I'm getting, I like to throw things out there on the old Twitter, kind of push some buttons, ruffle some feathers, if you will. And it's not because I'm an asshole.
Nah.
It's because I really do get a lot of value from the data, right? I like to see the pushback that people are getting. A lot of our sell side analyst friends like to get client information and questions and concerns and then address them together. I really like it when they do that. Not everybody does that. Some of them do that. So I figured it would be a pretty good idea if we did that a little bit today. Mr. Strazza, over the last 12 months, the NASDAQ 100 is up 40%.
Yeah, it is.
Is that because it's a bear market?
No, but what would a bear say back to you? The Dow and Russell are unchanged or negative, right? It's a thin bull. It's a historically thin bull.
I also want to make an interesting point here. If you want to throw up the value line geometric index, this one represents the median stock. So the index that is representing the median stock is now just went out at the lowest levels in a year.
Yep.
Strazza, I just want to point something out.
Please.
Do you know what the market did the last time that the value line geometric index closed at the lowest levels in a year? You know what? You want to see what it did?
Bottom.
Throw up slide 1, Fonz. Throw it up. This is what the stock market did the last time that the value line geometric index closed at the lowest levels in a year. Technology up 46%, communications up 42%, industrials up 22%. This is on a cap weighted basis. So the best performing sectors, technology, communications, industrials, over the last year, right? Now, why don't we look at the worst performing sectors? Utilities, consumer staples, real estate. Mr. Strazza, when you go back and look at every bull market in history, you know what you're going to find? You're going to find that these are the stocks that tend to lead, and these are the stocks that tend to lag. Why is this any different this time?
Don't you think, though, there's something to be said for how thin of a market it's been, right? Like even something like communications, awesome, up 42%. I got a chart I want to talk about in a minute. Equal weight communications, they don't look the same.
Well, equal weight communications is not Facebook and Google, right?
But ultimately what you're saying is this 42% from XLC is 2 stocks and change.
Well, on an equally weighted basis, communications is up 11%. Right? Discretionary is up 14% on an equally weighted basis. Industrial is up 22%. Technology up 28%. So even on an equally weighted basis, they look good. Now, here's something else.
Yeah.
Is it the strongest bull market of all time?
Absolutely not. Not even
the
close.
answer is absolutely not. It's actually one of the weaker bull markets that we've seen. Right. And Mike Hurley made a good point of that in our happy hour with traders the first evening of Chart Summit. By the way, if you want to, Spencer, drop the link for Chart Summit. If you guys have not watched those videos, we are incredibly fortunate to have very, very smart and well-informed drinking buddies. And which is basically what Chart Summit is. JC calls all his drinking buddies, tells them to come in and, share some charts, and they do a heck of a job. So chartsummit.com. So the breadth happy hour with traders that we did on the first evening, Mike Hurley made a great point of saying that this is one of the weaker bull markets. Now, my point is, just because it is one of the weaker bull markets on record, does it mean it's a bear market? Right? Yeah. Most stocks are up over the last year. Most stocks are up. The most offensive of stocks, like the most risk-on stocks, are up the most.
Yep.
The most risk-off stocks are the ones that have performed the worst. So again, is it the strongest bull market ever? No. But does that mean it's a bear market? No. I'll give you another one, Mr. Strazza. When you go back and study every bull market over the last 100 years, which humans are lazy. They don't like to do that. They like to turn on the TV and listen to what the pretty girl on the television tells them, right? Because humans are dumb. Like, not dumb. Lazy is probably the right. Always looking for shortcuts. Perfectly natural. But it's important to be aware of those flaws and overcome them. Most humans are not aware of those flaws, and those that are not mentally strong enough to overcome them. So that's a big problem. So my suggestion for you guys is to actually go back and do the work yourself instead of listening to the pretty lady on the TV, right? What you'll notice is that regardless of whether the first year of a bull market is one of the strongest of all time or one of the weakest of all time, it has no impact whatsoever on the performance of year 2. Regardless of of how strong or weak the first year of a bull market is, year 2 of a bull market tends to be strong. After the S&P 500 puts in a low, an 18-month low. Shout out Ari Walt, does a lot of great work on this as well. Ryan Dietrich does a lot of great work on this as well. Jonathan Krinsky does a lot of great work on this as well. I encourage you, read if you get your hands on what those guys are saying. I encourage you to do that. Those are old buddies of mine. They're great. They do a lot of great historical analysis, more so than we do here. We like to focus more on what's going on here instead of data mining. But when you have questions like this, like, oh, if this first year of a bull market is stronger or weaker, what does that mean? It doesn't mean anything.
Isn't that really asking for a lot, though, particularly from growth or index like the NASDAQ? They came out here and had one of the best years ever this year and are holding those gains. I think it'll be tough to beat next year. That's all I'm saying.
Yeah. Okay. So let's say it's only up 38% next year.
Right.
Is that a problem? All right. You know. Also, I just want to note a lot of people have a big problem with the Nasdaq 100 and the S&P 500, right? A big
they're so
problem with it, right? Now, let me ask you this. These indexes were literally designed to buy more of the best stocks and little or none at all of the worst stocks. So here we are, an index or a couple of indexes own a ton of the best stocks and little or none of the worst stocks.
Well,
What's the problem?
What you're saying is it's ironic in a sense that the same reason why a lot of average investors don't love these indexes is the very same reason why those same investors should absolutely own those indexes.
It's probably true. Just because Standard & Poor's has a better momentum strategy than you do,
yeah, right.
doesn't mean it's a bear market. It might be a bear market in your household, but why is that our problem, right? The S&P 500, I've said it forever, is the best momentum strategy ever. Buys more of the best ones, kicks out all the worst ones. Why does that make people so angry?
Doesn't make me angry.
Well, I want to know what Spencer thinks here because, as I always like to tell Strazza is a unique fellow. And most people did not grow up in Greenwich, Connecticut, and hang out with us all day, and now live in Key West. You are in a unique situation. Your father's an accountant. You know, like you are not the average investor. I would argue Spencer leans more towards the median average investor in terms of mentality. Right?
I definitely do love my index funds. If that makes me average, then okay.
It makes you smart. It makes you better at math than most investors.
What I was going to say is happy almost 3-month anniversary to the all-time highs in the Qs. So
it's been a while. It's been a while. Stocks have been dead in the water here, correcting.
For the record, the new 52-week highs list peaked over 3 months ago. So while we might be waiting for the indexes to reach their anniversary,
but it's the same point. It's the same point, right?
What is the point? What is the point of the new highs peak 3 months?
The point is we've been correcting for over 3 months.
Right.
People are like, "Oh, we're due for a correction." It's like, bro,
we've been in one. Y'all are talking about bull markets and everything, and it's like, well, sure, maybe, but the last 3 months have been, you know what I mean?
Mr. Israel, so, I would encourage you to go back and study every bull market in history, and you know what you're going to find in every single one of those? You're going to find 3-month corrections.
Yeah, I sure. I'm not saying it's a bad thing.
Particularly,
just not banging on the table. You know what I mean?
Particularly during the time of the year where seasonally we get those corrections. I will reiterate. If the market was not a mess over the last 3 months, that would actually be very strange. It would be very unusual. It would be very uncharacteristic of the market if it was just raging higher over the last 3 months. That would be really weird. It would be abnormal. So the fact that people think it's strange that the market's been correcting for the last 3 months, those people are only the people that are either really bad at math or they haven't gone back and actually taken a look at what's happened throughout history, or both.
I also just want to throw out that the new highs list will peak long before the market peaks. And that doesn't mean you want to not be invested or run from the market.
That's right.
New highs peaked in 2021, early 2021.
In February.
Right. It was like a year later when the indexes peaked. And it got harder to pick stocks, but you still wanted to be long stocks in that period.
Just not Chinese and Kathy Wood stock.
You had to really manage risk because growth was getting absolutely slaughtered, right? Any of these new IPOs, techie stuff was getting destroyed, and the mega caps were just climbing the new heights. So,
by the way, people are talking about how the median stock is flat over the last year, or down, or slightly up, whatever. If you want to zoom out, it's actually been flat for 25 years. So again, you don't want to own the median stock in this environment. Do you ever want to own the median stock?
Probably not.
Probably not.
But my point was, you can understand why it's hard to be pounding on the table saying bull market when the last 3 months have been
hard for who?
Anyone, right? Not you, obviously, but anyone else, right?
Good. If it was so easy to be pounding the table that it's a bull market, do you think it's a bull market?
maybe the later stages, but yeah.
When people are like, oh, but there's so much uncertainty, there's so many concerns.
Well, there's
It's
always
when
there's always concerns.
It's
Yeah.
when and it's
Yeah.
usually a bull market, by the way. It's when there aren't any concerns and it's very obvious that it's a bull market. That's when you need to worry.
Yeah. All right.
You guys
Yeah.
think I should get a gold chain?
Yes.
Move to Miami? Yeah.
You got to get, it's a San Lazaro. You need a San Lazaro chain.
I was thinking like a big thick one with like an Italian horn, like real.
No. San
body
Lazaro. Saint Lazarus for you gringos. San Lazaro.
All right.
All right. You guys want to do? We got one earnings, and we can do that real quick, and then we'll bring on John.
I'll introduce you to Pepe down in El Barrio. I got you. Pepe will hook you up.
Jeez,
All right, we'll go jewelry shopping.
We aren't doing anything. You are going to see Pepe.
You can come. I have things to say about Rite Aid eventually too. I don't think
Pepe's gonna make you a nice
right.
cafecito. You know what I'm saying?
We'll get to Ray a little bit later. Let's do the one earnings we have this morning now, and then we'll bring on John. We got one report today.
All right, do it.
Talk to Chuck, everyone. Charles Schwab earnings this morning. EPS 2-cent beat, 77 versus 75 cents. Sales also slight miss. Sorry, 4.6 versus 4.61 versus 4.63 billion dollars. So mixed headline numbers for Chucky Chuck this morning. If anyone here uses Thinkorswim, you've gotten notified the most recent time you've logged in saying that, hey, better make that Charles Schwab account because November 7th, 6th, one of those days, we're going to be cutting you off. So you need your Schwab account to access that going forward. Anyway, stock is I don't know. It's up a little bit. It's mixed this morning.
They changed the color of the app, and it's very confusing for me. I don't like it.
All right, so just hold on.
How long is it going to take me to figure, to like readjust my brain?
Wait, guys, this is important. Financials are under pressure. It's a big week for the banks and the broader financial space. Schwab is what we call a bellwether. You don't want to.
Is it?
Yeah, man. Yes.
A bellwether for what? Brokers?
This is America's retail brokerage. That is important.
I hadn't really thought of it that way. It's not Fidelity. It's Charles Schwab.
Doesn't matter. Fidelity's private anyway. They're similar, right?
It is Fidelity, but Fidelity is
private.
private.
Kolovos. Kolovos used to work at Fidelity. We'll ask him.
I don't have that data.
It's the same difference.
Listen, bellwether, you don't want to see structural damage in these kinds of stocks. I think that happens to Schwab if it violates those .com bubble highs from 25 years ago. That's problematic. You don't want to see companies like this struggle, and they're going through similar issues to the rest of the banking space, right? Because there is a large retail business there where I think they probably have balance sheet problems. They do, right? So they're navigating this interest rate environment just like the other financials are. Mm-hmm. I think problems, this chart becomes a problem below 50, 51.
Yeah. What does that mean for XLF if that starts to break? Does it mean XLF is coming with it?
It's hard to say. Right?
What's the weighting of Schwab in
any banks today, Spencer?
I don't think it's relevant.
Any regionals?
No.
Can we talk about? Hold on, time out.
Right.
Can we talk about how Morgan Stanley is pushing new 52-week lows?
They don't look good. They don't.
Is Morgan Stanley America's broker? America's financial advisory?
No, I wouldn't call them. I wouldn't call them a bellwether.
Morgan Stanley, you wouldn't call a bellwether?
No. JP Morgan.
No.
You don't need all six of them.
All right. I mean, remember Smith Barney, E-Trade,
dude. Who uses Morgan Stanley? It's a high net worth situation for them these days. You're not going there and open up a bank account at Morgan Stanley. It's just no.
Well, they're not a commercial bank, so right. So no one's doing that.
Yeah, but they were only a commercial bank because there was a loophole in 2008. So they all converted to banks. Remember?
Schwab is a bellwether, in my opinion, because they're so consumer.
Morgan Stanley has 4.6 trillion in assets. Is that in zero the same? Oh, sorry, 6 trillion. 6 trillion in assets.
That's a lot. I'm just saying they're doing.
Is that a lot?
Yeah.
I'm asking. That's a legit question. I know I'm sarcastic a lot, but is that a lot? 6 trillion?
Sure.
You think?
Yeah.
All right.
A lot of zeros, bro.
That's too many zeros for me to count. It's a lot.
We have Ozempic news again.
No, we don't have Ozempic news. We have
Schwab falling because of the impact of Ozempic.
Ozempic. That's actually what's happening this morning. No, we have Eli Lilly has their version of Ozempic news on that, but we'll get to that later. Let's bring on our guest, Jon Kolovos, head of technical strategy and macro risk advisors. Here he is.
Oh,
oops, sorry.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Kolovos.
What's up, guys? Good to see you.
Hey,
John.
for being here. Always a pleasure.
Yeah. And
what took him
Steve,
so long to get on the show? Is that
Hey,
Spencer's
listen.
fault?
Yeah,
Probably.
it is. I've been saying since he was on with Pat like 3 weeks ago now. Where's John? Why isn't he on the show yet?
I'm just hanging out, looking at charts and playing guitar, man. So I'm always around. So happy
I'm a
to
little
be
jealous.
here.
Strazza gets a lot more of you than I do. I feel like I never see you anymore. Strazza's like, oh yeah, I was hanging out with John.
He hung out this time last year.
That's right. And that's when I learned you lived in Key West, and my mind was blown.
Have you been down? You're supposed to text them.
Yeah, we went down. We took the family down. Believe it or not, we did take the family. They're old enough now. Back in May or June or so. Had a great time. Spent half my time at Hog's Breath, of course, and took the kids to Sloppy Joe's. And once we put them to bed, the wife and I bar hopped for a while.
You got to let me know next time you do that. I'll meet you at Hog's Breath.
Can I just tell you something? I know Sloppy Joe's is like super touristy and everything like that. Those Sloppy Joes are delicious.
They are good.
Am I wrong?
I've never had one. I've never eaten them.
Stop. Are you serious?
Yeah. It's always crowded, man. It's always a crowded bar. Good for them.
You're gonna get yourself a Sloppy Joe.
All right. Before I leave Key West, that's
honestly like it's kind of silly. It's like, oh, I like it extra sloppy, you know, like all the jokes and everything. They're actually really good. Come on. All right.
Look at him. He's a local. He's not gonna say he's into it. He's a local.
John, NASDAQ's up 40% in the last 12 months. Is that because it's a bear market?
Is that because it's not a bear market for NASDAQ? That's for sure.
Well, it's either a bear market or it's not a bear market. It can't be bear markets are a function of the environment, are they not? So in this environment, is this a bull market for equities? Is this a bear market for equities?
It's a very lopsided bull market.
Okay, so because it's on the weaker side of bull markets throughout history, does that make it a bear market?
No, not yet.
Right. And historically speaking, you are you're probably more of a historian than I am, if I had to bet. Historically speaking, weaker year ones of bull markets, does that have any impact on year two? By my math, the answer is no.
No. But then what I do worry about quite a bit is we don't know yet. Was 21 the secular peak for about 5 or 6 years? We don't know that yet, right? So a big part of my view of late has been, I think the S&P gets to 4,800 by the beginning of next year or so. I'm not quite sure we're going to see sustained gains. And I worry. I spent a lot of time thinking about, are we in a secular decline? Now, does that mean like what we went through the last 2 times? I don't think it'll repeat like that, but maybe something like we went through the 70s.
Which 2
the
times
40s,
in particular? Which 2 times, John? Which 2 times?
The dot-com burst and then great financial crisis decline. All right. I don't think we have to do that. When I talk to folks, they're like, oh, John, you're being, sell side, trying to get people's attention. I'm like, no, but I think another version of a secular decline would be something what happened in the 1940s where the Dow went sideways literally for like 6 years. And that's also a possibility because we're kind of in this world where, bullish, bearish, but what if just nothing? And I tell you, that nothing is going to be painful. So I'll leave it there. I think we're on a bull market. I just don't know how sustainable it will be until a lot of different things change.
First of all, I love that when you say .com and financial crisis, you're drawing air tops with your fingers.
He can't help himself.
Fantastic.
He's like, he sees the chart in his head. So he's like,
it's messed up. Yeah, it's true.
So if that's going to be the case, and like you said, we won't experience sustained gains, even for the strongest groups and indexes. What kind of information, what charts are you looking at to give you that heads up? Is it the Russell 2000? Something like financials? Like, are you looking at the laggards? How are
Yeah, I mean, geez, we can go a lot of different ways if you want to with it. You know, I'm sitting here with a bunch of chart geeks, so I don't have to kind of explain a lot of the stuff, which I have to do with a lot of folks. We can start with big picture. Let's do big picture, right? It's almost an academic argument, right? We can talk about how the secular trends of commodities and stocks typically don't move together, right? They kind of alternate from each other. So
are we looking at a particular chart here, John?
I did not bring this chart yet,
okay.
right? We'll get into the other stuff in a second. But think about a commodity bull market of the 70s, for instance, right? What did stocks do? Nothing, right? That's a good example of that, right?
They had some serious rippers, though.
For sure. I'm talking big picture, right? And what I worry about is that COVID bottom in 2020 when oil went negative. How is that not a secular low for oil? How is that not, right? It's freaking negative prices. Like that has to be one, right? And then you kind of overlay chart analysis, cycle analysis, Elliott, blah, 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 blah. You start thinking like, oh crap, we're probably just in leg 1 of 5 of an oil bull market. Same idea can be said with gold. Big base breakout about 5 years ago. Thing looks like it's really consolidating, ready to break out, that sort of stuff. So I'm more in the camp. I think commodities are in a secular bull. It's just a matter of when stocks are going to go, oh crap, we're done. And that's why I say I worry about how sustainable the new highs are going to be going into next year. Particularly, I would say probably leading into the election, stocks just stall and maybe fall.
John, let me ask you this. How many commodity bull markets throughout history have we seen where gold doesn't participate?
None.
What about copper?
None. Eventually, copper participates.
Right. So for your thesis to be correct, and by the way, I agree with your thesis, you got to see the metals participating at some point, no?
Yes. I think copper will eventually participate on the latter phase of it. It doesn't necessarily have to. And that also worries me too for the shorter term. If you want to just kind of steer things to the shorter term, copper is kind of trading very, very weak. Hasn't broken down. It did put in its low last summer.
Yep.
But like, why can't it get it off the ground? That worries me, right? Like what's its problem? Right. And if it's got a PhD in economics, why isn't it gangbusters? So I think right now the issue with commodities and oil in particular is not demand, it's supply. So what we saw on Friday, right, with all this geopolitical stuff that's going on, we saw gold and oil rally, like face melting, 4% at the same time, concurrent. That's very fear-like. And I know wars were supposed to take the other side, right? You buy the cannons and sell the trumpets. But like, I kind of think like this is stuff I'm worrying about, right? I'm still optimistic, right, for now. But like, Russia invaded Ukraine, markets declined, but then quickly rallied. But that set the tone for that decline, for the 22 decline. Yep. And then for Gulf War I, same idea-ish. And this analog I like a lot in that the spike in oil was a component or a reason for the bear market in stocks and the eventual recession. But the AD line was in a steady decline from 1989 onward. So S&P made a 52-week high. The AD line did not. Actually was declining. And that analog I like a lot. I don't think we have to fall completely out of bed, but hey, you get a spike in oil off of all this nonsense that could create the recession in the bear market.
John, you're as much of a chart nerd, maybe even worse than we are. We can't have a legit conversation without talking about interest rates.
Yeah.
Commodity bull market, stocks, you're not quite sure. Sounds to me like you think rates are going higher.
Right. The secular trend of rates is definitely going higher, right? So
how did I guess?
That was a generational low. So blah, 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 right? Again, COVID really screwed up cycles and really sped things up and all that. So we're done. I think interest rates are going higher and higher for the time being. So what I think the equity market's going through is a tantrum right now. Stocks and rates can get along. Cats and dogs can get along. Rates and equities can get along, but there's going to be this transition period where they're going to be like, I don't know what the F to do here. And I think we're in that moment now where they don't know what to do. So for the here and the now, I do think upside is somewhat limited to the 10-year, 5%-ish, I hope, because if that happens, then forget about it. Like we're going down.
Forget about it. What does forget about it mean?
Steve knows. He's got the whole look going on right now. Forget about it.
Forget about it.
Forget about it.
The guys in the chat said I need a gold chain to go with this. So
yeah, forget about it.
Yeah.
Yeah. So for interest rates, right, for the equity market to get a tailwind, I'm thinking at least at a minimum 4.5 has to break on the downside, but really it's 430 that breaks that uptrend that it's been in, and then stocks get that tailwind, and then we'll look in 4,600, 4,800, and all right, then we'll take it from there. So it's more of a correction within an ongoing uptrend is what I'm looking.
Can
Can
we can we throw up slide 1, Spencer,
Hold on.
please?
Yeah, all this is in my chart deck, guys. So
this is important. This is important. Slide 1, Spencer. Last year, bonds got slammed. Growth got hit with it. This year, bonds are getting slammed. Growth is making new 52-week highs relative to value.
Yep.
What changed here?
The composition of the growth index, right? So that those are the safety stocks.
Did it?
That's what it is.
What composition of growth? What changed?
That's what it is. It's what Apple is. It's what all those guys are, the Mr. Softy.
So mega cap tech is a defensive trade, is what you're saying.
Of course. And
but it wasn't a defensive trade last year?
Look at it has been since COVID, right? Everyone thought during COVID.
Why are the reactions vastly different between last year and this year?
What's on the other end of this ratio? It's the value-y stuff, which is getting crushed by the tightening Fed cycle as well, right? So banks, we talk about this. This is a huge 2 weeks for banks and for market breadth. So if you want to go to my deck, we can walk through all that sort of stuff. But that's what this is huge. This is a huge 2 weeks. 90% of the KRE is going to be reporting over the next 2 weeks. And that's going to be important for not just them, but also for market breadth.
Can we do chart 3? Speaking of
you
market
think these
breadth?
Regional banks are that important? These little banks that no one's ever heard of? You think they really matter?
Kind of yes. Kind of yes, no. It matters. It's it's in the category of it matters until it does, right? Right. All you need
many of them.
All you need is another SIVB issue, and boom, we're in trouble.
You get one of these.
And if Tua gets hurt, the Dolphins are done. And if like you can say that about anything at any point in the cycle.
Yeah, fair point. But you got to think about the different parts of the economy that these regional banks touch, right? So they start to roll over. Honestly, I don't think there's 210 regional banks in the Russell 3000. Okay,
how many?
Publicly traded 200, 210. Right. So here, let's geek out. You ready? Let's do this. Right. These regional banks are a major reason why breadth is so poor for the Russell 3000. The Russell 3000 AD line made a 52-week low on Friday. Right. When you have this many stocks in the index, right, in the breadth line, it's equal weighted. Mathematically, it's going to be very hard for that line to budge. And it's going to be very hard for the IWM to look compelling. And then when I just do simple chart analysis, the KRE on the left, that really looks like a bear flag, doesn't it? That it got broken down from and projects down to, a much lower level than where it is right now. These need to stabilize. And I think the earnings part of it. So I do believe, this is what I picked up on the buy side. Technical things happen for fundamental reasons, right? It's not just purely about the charts. These are representation. These represent what the fundamentals are going on here. And when something looks as awful as this,
listen to him. Say it again, Kolovos. Say it again.
Technical things happen for fundamental reasons, right? And there's a reason why this chart looks the way it does. It represents the fundamentals of the company, right? Or the sector, right? Something has to change, right? And do your work. All paths lead to interest rates right now. They need to stop going up. They need to at least consolidate and move sideways, if not slightly lower. Give these companies some breathing room. Allow them to base and go sideways for Pete's sakes. So that way we don't have a collapse. You got to also remember one thing: when markets fall apart, it doesn't necessarily have to happen for a real legitimate reason. There's also a liquidity problem where people just rush to the exits and correlations go to 1, and you just sit back and you go, "Oh crap, what just happened?" And then cool heads prevail and you start nibbling again. But that's one thing that I worry is what happens with these regional banks, and that it ties into the breadth underpinnings of the market. So if you go back to my deck, if you want to decompose breadth, I don't know how much time we have, but
chart 3.
It's interesting and how the AD line, let's go forward one more. This is one reason why I'm bullish. Chuck Norris, we have a breadth momentum. It's good. Let's keep going. One more. That seasonality says that things are good. So I had to stop here for the small caps for a second. We'll go back to regionals. I can't help but think that the IWM is pulling on a classic ABC sort of pullback, right? Bear markets do what? Move in 3 phases until IWM breaks above 200, you have to at least assume that it's heading to 136, at least be prepared for that idea. So now once you decompose, and let's pull forward on the slides, once you decompose what's going on here, it comes down to regional banks, a lot of companies that are trying to cure cancer and they're just not. It just gets really, really, really messy. Can we flip forward a little bit on the breadth stuff?
Yes.
Yeah.
Okay. Go ahead. Let's pause.
No, I think that's a great chart. The Russell 2000, I think, is going to tip us off if there's going to be a corrective wave that leads us, further than we've already seen over the past 3 months. And I think if you look at micro caps, those charts tend to look similar. IWC already broke its range lows. It's on its way.
Yeah, that's right. So another thing to think about is markets are driven by animal spirits. I've been an institutional technician for over 25 years. Okay. Most of my clients live everywhere. They just don't live in the S&P. They get a lot of their alpha from the mid caps and the small caps. Yeah. A lot of their funds, right? A lot of their performance, unfortunately, looks more like the mid cap and the small cap index. So they're scented. They're down and out. Trust me. So maybe that's a bullish thing. Okay. Right. But most people's portfolios don't look like the S&P. They look like everything else. So there's a sentiment component into it, and there's a behavioral component into it. So if the small caps were to break down in a sustained way, selling begets selling, right? So the next thing I want,
the Russell 2000 and the XLF are trading tick for tick.
Financials go with it, if that's the case, right?
It couldn't look more the same,
right?
In fact, if I showed you a chart of the XLF or the IWM and I took out the axis, you wouldn't be able to tell me which one's which.
Yeah, that's fair enough. That's fair.
And you can draw them for me, and you still wouldn't be able to tell me which one's which.
That's true. That's true. But you know what, though? You know what, JC and Steve? It's like, I think this whole breadth argument falls into the do you want to be right or do you want to make money category, right? So we can be geeks and talk about how poor breadth is. That doesn't really help anybody make any money, right? So other major divergences in breadth, the most obvious one. So this is the second worst divergence in breadth after a 1 year anniversary of the low. So we back.
How are you defining breadth?
There we go. AD. I'm doing AD line right now. I believe the trend of breadth.
How much weighting are you putting on these AD lines? Hasn't the NASDAQ AD line been making new lows our whole lives?
Yes. And the reason why is what you were talking about earlier, right? And same with the Shanghai Composite. It's always made new lows is because the S&P is better at replacing stocks than the NASDAQ is. And don't forget, most companies just go nowhere. Most companies do go out of business.
And this is the composite, by the way. So there's so much crap in there.
Well,
right.
So, John, what you're saying is there were a ton of stocks that IPO during the dot-com bubble, then a ton of stocks that disappeared after the AD line got destroyed, and we don't have a ton of stocks anymore, so it's never going to get back there.
And then the SPACs.
They're gone. They're gone. And same with the Shanghai Composite. You pull it, do the study on that one, right? Just a lot of rinky dinks, and they just
you think the large caps are scams? Imagine the little ones.
Right, exactly. But that's how it is. And we can do a whole tutorial on how to read AD lines. I don't think you're really supposed to look at AD lines for more than one cycle at a time. But that's here, no,
you can
there.
Go blind if you look at them too much.
Yeah. So the reason why I look at the AD line first is that it's the trend of breadth. Whereas the percentage of stocks above a moving average is the momentum of breadth.
Ooh, I like that. I like that. That's a good one, Strazza. That's a good one.
There you go. Right. Like so I'm a trend follower, so I want to follow the trend of breadth. Okay. And I use the other ones to tell me the momentum of breadth. Right. So, yeah, that's that on that one. So when it comes to the AD line, making new 52-week lows, essentially as the market's moving higher. So that's what I show here, right? The Russell 3000 is in the 76th percentile of the last year. Okay, it's not at a new high, it's not at a new low, it's in the 76th percentile. The advanced decline line as of Thursday, when I printed this chart, was in the 11th percentile of.
Throw up the next slide, Spencer. Throw up slide 7.
The next one. Now, when you want to visually take a look at breadth 1 year after a bear market bottom, look at where 2023 is versus where the linear regression line is.
John, how do you define bear market bottom? 18-month low?
I did. You know what I did? I hate this debate. You don't. That's what you asked, right? I just used the Ned Davis table. I just used theirs. I love Ned Davis's definition of bull and bear markets. They throw in 20%, but also there's a time element as well in there, right? So if you don't make money for 18 months, guess what? You're in a bear market, right? I just use that. Honestly.
According to what index, John?
S&P. S&P.
Ned Davis is the man, so I'm not going to argue with him.
Same here, and a lot of this.
And you quoted Ned Davis earlier. Are you trying to be right or make money? That's the book you need to read for those of you listening. The chat's blowing up. They love John. If you want to read about what John is talking about here, go read that book.
Yep, that's true. And that, he was one of the first to do back testing, try to quantify the technicals, which is all we do basically these days anyways. And when I was working with DeGraff for about a dozen years back in the 90s and the 2000s, that's one thing we were motivated by. It was like, let's get rid of the purple crayons and head and shoulders, knees and toes patterns, and let's quantify the technicals a bit. And Ned was the leader of that. So,
John, there's a great podcast between Ned Davis and DeGraff, the two of them together. Have you heard that one?
A while ago, yeah. I mean,
it was like a year or two ago, which for me, these are like two of my all-time favorites. Battling It Out is one of the best podcasts I've ever heard.
Yeah, no, they're good.
Email me if you can't find it, guys. I'll send it to you.
Yeah.
So is it a problem if this is like 1999, John? I think that's what most people are probably thinking when they look
All right. So let's look at the charts, right? This is, do you want to be right or you want to make money? So let's go to the next one, right? So the next one shows the 1999 example. And what's interesting in the 1999 example is that breadth peaked well before long-term capital did, right? And I think it was actually March. And then the market bottomed in August, rallied about 70% until March 2020. The 80 line kept going down and down and down. And what's interesting about this time frame is, and this is when I was very young in the business, honestly, doubled my money every other week, to be quite frank with you. If you just did like the Dick Davis, was it Rick Davis or Dick Davis Digest? You just buy any of his stocks, those things went up. I digress. What is interesting here is it took how long? 2 years-ish for the market to eventually roll over. All right. So Bob, I don't want to mention. I want to mention. So legend has it that Bob Farrell at this time frame was asked to retire at this time frame. He was right that this was going to end in a disaster. But being bearish during a bubble is a career ender, right? And I think a lot of folks our age-ish, I'm in my 40s now. I don't know. You, Steve, you look like you're still in your 20s. But like what a lot of us are thinking about is, well, are we in this environment? I don't want to be too bearish too soon, even though I know the market's out of gear. So just think about that for a second. Now go to the next one. Another example, extreme example. This is the 1970s. There was a mini bear in 1971, which I have here on the left-hand chart. 1 year later, the Dow Jones, right, because now I had to switch over to NYC stats, was at a new high, 100th percentile. But the AD line was only in the 43rd percentile, right? You see the divergence. What I'm trying to do is I'm trying to quantify.
But John, we were in the midst of a secular bear market, like a 18-year, 17-year bear market.
We were in the middle of it. We're in the middle.
Right, we're in the middle of it, right?
Right. But at the same time, you know that in hindsight. That's why I started earlier saying, I don't know if 21 was the beginning of the bear. I don't know yet. Like until you make that higher high, you still have to respect that last level of resistance, right? People say, Fibonacci 61.8, you break above there and up and away. Really, the last level is the 100% retracement.
Nerd alert.
Yeah. So anyways, I just completely geeked out on you. Now go on to the next one, right? And that actually led to steeper declines. And then I like this analog from 46 to 49 is that this bear market bottomed in 1947. 1 year later, the index was at a new high. AD line was only in the 68th percentile, and then you kept rolling over. So you can be right, but you can still make money somehow. So how do you build portfolios around this? And I think that's really the crux of it, and it's how you're allocating. So your question, well, you started off, you like the NASDAQ, John? Yeah, I like NASDAQ stocks, sure. I don't like small cap stocks. I don't like regional banks. It's really about positioning where breadth is telling you to be. Breadth is telling you not to be in the bulk of the market. Breadth is telling you to be concentrated in what is winning.
Yeah, John, the best performers, technology, industrials, communications, the worst performers, utilities, consumer staples. You can even throw real estate, even healthcare is down towards the end. Sounds like the more offensive sectors are doing the best. The more defensive sectors are doing the worst. Reminds me a lot of bull markets that we've seen in the past. Before the fund police comes in and kicks you out, can you tell us what we're buying?
Yeah.
I could tell you in aggregate what you're buying. Unfortunately, the compliance police won't tell me specifically what stocks that you're buying.
Yeah, bastards. Tickers or nothing.
Yeah. So my models will still have me tilted towards energy, industrials, and tech, and parts of financials. So even though I just shit on financials, it's really the banks.
Yeah, but hold on. But which financials? Financials is a big thing.
Insurance. capital
Some of the
markets.
brokers like CBOE, CME making new
There
52
you
week
go.
highs. There's some
Yeah,
strength there. Capital markets. Yep.
markets and your insurance ones. Those are
Not
doing
regionals.
just not regionals.
The
Just
broker
not regionals.
dealer, the broker dealer index looks as good as semis or home builders did a few months ago. It was right back there at old highs.
And it's all about interest rates, right? So your safeties, your traditional safety sectors, staples, utilities, real estate, are down because rates have melted higher. They will be a relative buy once I pull. Well, it's not me. It's once the market rolls over and breaks trend, S&P under 41.45. Then at that point, I would say, no, I don't think we're in a bull market anymore. We might need to come down and revisit the October lows. Then on a relative basis, I would buy those.
And if you start to see that relative strength in staples and low volatility stocks, that is characteristic of a bear market.
Correct. I just don't have enough of that evidence to say.
Well, we don't have any of it for the.
Oh, wait.
I'm debating. I'm telling you, lopsided breath is enough to at least.
Fine, but I'm saying we haven't got any rotation at all into any of those areas.
Hold on.
Yet.
This is a question we've been asking a lot of people. I think it's important. You talked about how the outperformance from tech is defensive, right? How about the lack of outperformance from these other defensive groups? Are you just chalking that up to it's bond market stuff?
Yeah.
Staples making new relative lows, utilities, low vol.
Yeah, I think so. I think Staples got hit with a couple of idiosyncratic issues too, like hacking and whatnot. But I think inflation too for packaged foods and whatnot, that actually weighs on them.
Ozempic, right?
Yeah, all that
they're
nonsense.
losing weight, they're shopping less for. No.
Yeah.
Kolovos, last question quickly. Spencer's here. That means we got to go. Energy, while not as broad of a term as financials, anywhere specific in energy that you're focused on?
You're leaning more on the service names.
Yep.
You're looking at.
When was the last time you could say that, by the way?
Yeah.
Services are the laggard in energy like forever, right?
Yeah.
So just think about that.
You're looking more on that end of it.
They're going to have to bring more supply on. Those companies are going to have more work to do.
Here we go.
All right. Thanks a lot, John.
John, thank you so
welcome.
much. You're the man.
JC, very good to see you. Steve as well. Spencer,
Right.
good.
Pleasure.
John has to come back. The chat loved him. So
Chat loved him. Spencer, what took you so long, bro?
I'll have to bring him back.
Bring him back.
I never know what takes me so long to do anything.
I was supposed to text him. I didn't. It was the whole thing. Yeah.
All right. Oh, follow John on Twitter. John on Twitter.
John. I was going to ask him that. John is new on Twitter. He's getting active, getting out there. Love to see it. Definitely follow him at John _.
Well, yeah, the link to his handle was on the screen the whole time. It's also in the description on YouTube, so check it out there. Okay. All right. Let's see what Kimmy's up to, and because we're already running behind, so let's bring Kimmy on. Find out what she traded on Friday.
Hey guys,
Kimmy,
Yeah.
this is interesting here. This is interesting. You've got some open positions in companies that are due to report earnings this week,
Mm-hmm.
right? Goldman
stay in
Sachs.
stuff.
Yeah. You'll stay through it.
Yep.
Yeah, okay.
I do stay in
Okay.
stuff because I'll add or
Okay.
do whatever it is. I'll see.
Okay.
This market was a little dicey Friday. Went a little lower. We'll see if we head back lower, or it's bouncing this morning. It's very either we pulling into flag to head higher here, or we're just going to roll over. Friday was a little dicey. The weekend you never knew because obviously there's a lot of news going on. So we have to see what's going on here. So Lulu's gapping up because added to the S&P. So I'm going to watch that name. Lockheed Martin I'm watching. What else am I watching? Moderna was at 93.50 this morning. I was going to buy it and I didn't. I was waiting for the open. Now it's like $1 higher. So I have to watch that one.
Kimmy, Lockheed Martin, heck of a week last week. Like monster week. Are you looking to fade this or are you looking to go with it?
Potentially maybe a slight fade. NOC, Northrop Grumman, is also gapping up as well. I did, it's a liquid in the morning, but I did say if anyone in the room wanted to short it, someone did get a great short out of it on Friday on Northrop Grumman. I can't say that. I'll just say NOC.
These Long Island accents, they don't let you say some of these words.
That's true. That's true. So I'm going to be watching everything this morning. Friday, the market was really weak. I'm trying to see if this is a buying opportunity in here or we dip lower, or we go back down to the October lows. We'll see. Right? What do you think, JC? Think we're done going down?
I mean, listen, how does seasonality fit into your mindset? I'll tell you, for me, while I know that this is the time to be buying stocks historically for a year-end rally, does that necessarily mean that we're going to go in there and buy stocks because it's the right time? For me, no. I'm more interested in, is the market ignoring or respecting these seasonal tendencies? And so far, it continues to respect it. So I would be surprised if we didn't get a year-end rally. This is the time to be buying. There's a lot of other evidence that suggests to spend more time looking for stocks to buy versus spending that time looking for stocks to sell. Again, I'm looking out weeks and months here. I don't care what happens next year. I don't necessarily care what happens today, unless I'm in one of your trades. I'm looking out weeks and months. And for me, I think the path of least resistance is higher.
Yes, I agree. We're going to have a rally. I'm just wondering in here. Sometimes you get a double dip in October, so I'm wondering if we double dip, head a little lower or not,
Not in pre-election years, though.
Oh, yes, that is very true. That's
just
very
saying.
True.
Again, we're getting cute, and I don't want to get too cute, but it's important to put things into
we
context.
are flagging here. So I said in the room Friday, I said, nice pull in. We're flagging here. Let's see if this is flagging, meaning bull flagging to head higher, or we just need to go a little lower, So we'll see.
Well, I'll be watching, Kimmy. I'm ready to go. I got the account open. Let's go, baby. Let's go. I'm all fired up this morning.
I'm tired today. Woo, I don't know why.
I'm on a 21-hour fast right now, so I have more energy than God. Like I'm ready to I'm like the Kool-Aid man. I just want to run through the wall right now.
I have like my annual physical. I gotta get blood, and I have high cholesterol my whole life, so I gotta eat really good this week. I do 1 week of like eating super, super healthy, and for some reason it helps. But I have high cholesterol.
Kimmy, if your doctor tells you that you are unhealthy, tell me who that doctor is so I can smack him in the face.
We've got problems. We have problems.
We have big problems, yes.
Wait. No, I've been just had high cholesterol since I'm 13 years old. It's familiar. What they say, family, your familia.
Yeah.
I can't help it. I tried like to take one of those statin things. Oh, I mean, like I was aching. I felt terrible. I was like, just to like, it's great, but I was like, okay, not for me. I don't like medicine.
Nobody likes medicine, Kimmy.
No.
That's true. We don't. All right. Kimmy's going to head to her trading room right now. She's going to call her trades out as she makes them. If you want to be there and be in her trades as she's calling them out, check out the link. It's in the description on YouTube. It's where it says, join Kimmy's room. That's the link you click on, and then you get in there and she calls the trades out. And winners pretty frequently. She had 3 winners in 3 trades on Friday. So pretty frequently. She's got those winners. All right. Let's cover.
Oh, wait, can I just say, if Kimmy is unhealthy, then I'm going to be dead any day now.
Yeah. And by the way, it's not a camera issue for Kimmy. It's because she has a nice camera. Sometimes it's her background, which causes the picture to be a little bit fuzzy. Guest world in the chat, but yeah, she does have a good camera. So for her, it's not about that. Okay. Let's do some other news quickly here. We got a few other things to discuss besides the Schwab earnings. Kimmy mentioned Moderna. The COVID vaccine stocks are trading down, or at least they were last I checked. Let's check on Pfizer real fast. Pfizer, oh, wow, all the way back this morning. What a morning for Pfizer. On a morning where they cut their full-year earnings and revenue guidance. Actually, this happened Friday. Happened Friday after the close. They lowered their revenue guidance and their earnings guidance for the year because of slow COVID vaccine sales. That was basically the reason for that. They said revenue from their COVID treatment will come in $7 billion lower than previously anticipated. And so that was on Friday. This morning, they actually caught an upgrade. I think it was Jefferies. I want to say it was Jefferies this morning, upgrade to buy. So competing headlines this morning in Pfizer. It did open down in the pre-market at 4 a.m. Now back in the green this morning. So it's pulled a round trip. Very interesting morning for Pfizer here. this morning. So I wanted to put that on your radar. Also wanted to talk, can you mention Lulu? They are replacing Activision Blizzard in the S&P 500. So some mandated buying needing to happen here for Lulu. So that's why that stock is up this morning, up at 401.75 right now. What else did I have here for news? Manchester United, the M&A stuff going on there. Looks like it's resolved, but they're not getting taken over at a premium. So that's why that stock is down this morning. They're selling a minority stake to this British billionaire and not the whole company to an Arab sheikh. So MANU down on that headline. Vista Outdoor, VSTO, is selling its gun unit. They're selling. This is a company that is 2 units. It's guns / ammo, and it's like outdoor equipment, like Camelback. They're selling their gun unit, and as a result, they are lowering their guidance and sales outlook for the year in conjunction with that sale.
So it'll be a worse business, but they'll be allowed in more indexes. That's the decision these companies have to make.
Dude, this thing's down 20% this morning.
Yeah, perhaps, Steve. So the new company is, I had the name for it. It's going to be called, how do you pronounce this? It's going to be called Revelist, and the new ticker is going to be Gear, GEAR.
Wait, they're spinning off the guns to their own company?
No, they're selling the gun unit to a totally separate private company, like a Czechoslovakian company.
Yeah, you got it.
And they're they're getting rid of the gun entirely, and then they're changing the name of their new company, which is just going to be their outdoor stuff. So like Camelback and like Fox and all these outdoorsy brandy stuff, and they're going to change the name of the company.
Spencer, is this a tiny company?
Vista, VSTO.
What's the market cap on this? Why are we even talking about it?
I'm just going through some headlines here. It's $2 billion. Well, not anymore. It's not. But it was $2 billion before today. Anyway, so yeah, spin off there, and the new company is going to have some new silly name, Revelist, new ticker Gear, and it's all going to be outdoor products. And the last headline is Rite Aid. We talked about this one a couple weeks ago. Another one bites the dust, whether you want to say it was just a shitty business, or you can blame the opioid settlements, or a lot of reasons why. But Rite Aid is going bankrupt. That's what they filed for over the weekend. And good night.
All right, I got a lukewarm take here. It wasn't the opioid settlements that put them out of business, just to be clear. This company, the trajectory has been down for a long time now, like 20, 30 years. I'm trying to figure it out. Actually, the history of this company is fascinating. These guys were some of like the original accounting fraudsters 25 years ago. Their CEO went to jail for like 8 years for accounting fraud.
Oh.
Yeah, it's been a problem for a long time. What I will say, though, as someone who the opioid epidemic is near and dear and personal to me for a variety of reasons. So the reason I kind of say that is because I'm not speaking out of turn here. This is terrible, right? What is the function of a pharmacy to society?
To provide drugs that are prescribed by your doctor.
Take doctor's orders, right? And give you your drugs. These guys should not be sued out of business for the opioid epidemic. Like, you're pointing your finger at the wrong party here. It's actually pretty terrible. Think about the conversations you have with your pharmacist. They fill your prescription. Now we're going to blame them for not, knowing or tattling about the red flags that everyone was ignoring. More doctors should go to jail. They did a good job. They went after the drug makers, Purdue Pharma. We all know what happened there. They went after Insys, a lot of these bad actors. The doctors were the gatekeepers for this problem. And there are a lot of bad doctors who are still out there practicing, and we're suing pharmacies out of business. I think it's really ridiculous.
I don't necessarily disagree with that take. That's a lukewarm take.
As a pharmacist, how hard is it for you? You're basically sitting there and you have to go against the doctor's orders, right? You could report red flags. If you guys ever watched that documentary, The Pharmacist, on HBO, it's fantastic.
No, I have not.
Basically fired, had to leave his pharmacy because he was trying to be an activist and he was trying to point out the issues at his pharmacy. Yeah. got fired for it. Like it's not on them. So I think this is a huge miss by the regulators and the judicial system. Put the doctors in jail who are prescribing these things.
Well, settlement or not, the bankruptcy kind of supersedes that, right? So
they were going to go bankrupt anyway. This just kind
Yeah.
of pushed them over. Yeah, I don't know.
Yeah.
You know, they almost got bought by either CVS or Walgreens years ago, but antitrust wouldn't let it go through.
I mean, hey, at the direction we're going in, a CVS Walgreens merger is not far around the corner if these companies keep shrinking every year.
Yeah.
There won't be much left. But
so
oh shoot, wait, do we just wait? Oh wait, hold on. Do we just get this? Is that why? Thank you for that. Chat and Mary all over this. The SEC just approved a Bitcoin ETF, a spot Bitcoin ETF.
So I know it's not. So question from the chat, Mike Thornton. I know it's not Crypto Friday, but the SEC not appealing the grayscale Bitcoin decision feels like it should have been. No, the judge in that case literally scolded the SEC for what they did. There was going to be no appeal.
But why is it just moving now if we got that announcement days ago?
We didn't.
Yes, we did. That they're not going to appeal. We've got that on
that announcement.
That shouldn't move the market.
So why is Bitcoin up 2,300 points?
Because the SEC, there's reports. I'm trying to find it now. The SEC has approved a spot Bitcoin ETF. That's new.
It's not the grayscale not appealing thing. Everyone who's been paying attention to that knew the SEC was not going to appeal that case. The judge called what they did arbitrary and capricious and scolded them for their actions. So there was going to be no appeal. Everybody knew that.
This is
interesting. I didn't know that.
This is from Cointelegraph. You've seen a lot of people trying to confirm it on their own now, but Cointelegraph says the SEC just approved a spot Bitcoin ETF. So
about that, huh?
Hey, we've been waiting for Bitcoin to do a little something.
Sell the news.
Well, already it's being sold a little bit. I mean, off the high.
Listen, no matter the SEC could say that Bitcoin is a cure for cancer. If it doesn't break out above 31,000, there's nothing to do, right?
Imagine if the blockchain cured cancer.
I think it will one day.
It very briefly got over 30, just for the briefest of moments.
Blockchain plus AI equals cure for cancer.
It should.
I'm not kidding. I don't know anything about cancer or blockchains or AI.
But it should cure it.
It sounds good. I'm in. Sign me up for that.
Wow.
I like this. More news. Give me more news.
The only other headline was from Eli Lilly. Their weight loss drug. They reported phase 3 data, or data from their phase 3 trial on their version of Ozempic. It's not called that. It's called tirzepatide. Tirzepatide. And data was good. Surprise, right? So Eli Lilly trading higher on that headline this morning, but I can't stop looking at Bitcoin now. So
who are you? Who's the Spencer guy?
Everything taking it back. No, everything taking it back to the Bitcoin ETF right now. That's like the news of the morning.
Looks like they're fading your news of the morning. See why we don't follow the news? Because we don't give a damn.
iShares got it. iShares? All right. Good for iShares, man. Good for BlackRock.
Yeah, but aren't they all getting it now? Isn't that how this is going to work?
Yeah, but it's about who's first, right? Because whoever is first will get the assets. And
yeah, but what if they're first by like a week? Is that actually still first?
It doesn't. Yes, that is a long time.
I think the big three are all going to get assets, and anybody who's not them.
You think BlackRock slipped them a hundy under the table?
I don't think they need.
Yeah, they don't need to. They don't need to.
So this will be the biggest day for Bitcoin since March, though. So not nothing, regardless of the news. If it sticks, it is a nice looking candle. Let's see how we finish the day. Would love to hear JC and Strazza opinion on Lulu chart. No, I thought it was really interesting that Lulu is just now being added to the S&P 500. They must have been in there before. It must have been in the S&P and then removed at some point because it's not a small stock. It's been a profitable business for a long time. I don't know why they're just being added now. I thought that was strange.
It's $50 billion. So to Strazza's point, for an apparel company, I mean, that's a lot, right? Can you throw up slide 1, please, Mr. Spencer Israel?
Hey, and you know what they're replacing, JC?
I do not.
Your crappy video game stock.
Which one?
Activision.
Well,
Well,
I mean-
Activision's gone. They didn't get bought out.
yeah.
That's why.
All right. So fun fact. Ready for my fun fact? Throw up the Lulu chart. Lululemon has done nothing for 3 years. And after, let's say, going up 1,000% from 2017 to 2021, so rallies 1,000%, has done nothing for 3 years. Well-deserved digestion. Wouldn't you say there, Mr. Strazza?
This is a secular leader. What a strong stock. Great fundamental story. You know, these guys created their own brand new category. Now
Athleisure.
It's awesome what they've done, right? Nike thanks them. Under Armour thanks them. It's really cool. But it's been a strong stock. Now they're selling man pants. So everybody's getting a piece of this Lulu.
I got to tell you, I love my Lululemon clothes.
Dude.
I do. It was a hoodie the other day, and I asked my wife, and I was like, "Hey, where did this come from?" She's like, "You bought it on Lulu like 3 years ago, and I found it in the bottom of a drawer." I was like, "All right."
They're very comfortable, very wearable, very practical clothes.
It's true.
So good for
I
them.
like it.
Yeah, I think, JC, just like the consolidation we saw in the middle of 2010s, nice, like you said, well-deserved constructive digestion of gains.
And don't they, not to be a creep, but don't they get the credit for all these women wearing yoga pants all the time?
Yeah. And
so that's a net positive for society, no?
Oh my God. Yeah, they definitely get the credit for that. And remember, it was a thing like 10 years ago, maybe 15, when the yoga pants first started popping up.
Even like, Spencer's walking around in his yoga pants, you know?
Spencer has yoga pants. Yeah.
Yeah.
I do
That's
not.
quite the sight.
I do not have you. I own some sweatpants. They're not from Lulu, but hold on. There's conflicting. This Bitcoin thing may not be true. Okay,
Spencer, none of us care.
We don't need to do this live, and
we don't care.
It doesn't matter. These things are gonna get approved. I don't know why
whatever.
Moving so much.
Can we just wait for it to get above 31?
Yeah, but the price action.
ETF or no ETF, who gives a shit?
You're seeing the market react to like maybe fake news in real time.
You're seeing the market react.
You see how sentiment.
We don't care.
Do you see how markets work? Spencer is such a good example of how markets work right now.
Bitcoin's so distracted.
March.
He's so distracted by the shiny light.
You don't think it's interesting to see the market react?
No.
All right. I don't know how to respond to that. I think
you should check out the morning show on Stock Market TV. When Bitcoin is above 31, we're going to be talking about it every day.
We're going to be wearing orange.
Yep.
It's going to be so obnoxious.
I'm going to wear T-shirts that say HODL. Yeah.
I'm going to have my Miami jacket on.
Spencer's eyes are going to be rolling constantly. Like, that's when you know.
I'm going to Bitcoin Miami and NFT Miami.
Right. There you go.
I don't know. I think this is interesting to me. Even if I'm not going to buy here, you're seeing like price discovery at work and the market trying to make sense of it, which I think is interesting. So that's why.
Let the dancers dance and wake me up above 31.
Oh, those pants were so cringy, Rachel, that said juicy on the butts. Oh God. Remember
that wasn't Lulu.
I was a fan.
But those weren't Lulu pants.
They were Juicy Couture.
Yeah. Or Victoria's Secret. I don't know.
Who bought them, Coach?
I don't know.
Juicy or Michael Kors? Was it Kors? I don't know.
I'm talking to the wrong guy. Rachel would know.
Do we have anything on Hot Corner today?
Hot Corner dead as a doornail today.
No, we had like one or two things I saw.
No, there was nothing. It was dead as a doornail.
I have a little spotlight plan, though, if that's something anybody's interested in.
Let's do some spotlight. Give Strazza his flowers, and then we'll do the chart report.
Thank you.
You know, the show's missing is a
give him my flowers.
Goddamn Spencer spotlight.
Give him his time.
The show is missing.
The man deserves it.
Okay.
All right.
Chart 6. We're talking about the same levels and the same charts over and over and over again, and we're going to keep doing it because we're right there. These levels are important. You know, we just had a great conversation with John about how it's a thin bull market, and it's not about really being right in this environment, but more about making money, and you really want to be super laser focused on those groups that are working, and that's where you want to be looking for opportunities. At the index level, we have a beautiful, beautiful line in the sand right here at current prices, 430 August highs S&P 500. We're above there. I think you can look for opportunities at the index level or within the index, the S&P 500. You're going to want to skew towards the larger names. Next chart. The NASDAQ 100, well above those August highs, didn't bring along the chart. The Russell 2000, well below those August highs, right? So NASDAQ 100, a place you want to be fishing. Russell 2000, not. Dow, not yet, right? This is such an ugly chart. I hate ugly charts. I couldn't draw this in any other way. There's just a big level here. It's not perfect. It's not to the penny, right? We're overshooting. 340, 345. It's been tested like 5 times already just since late last year. If and when that goes, you can look in the Dow for opportunities. Next chart. Technology is, go to the next one, then we'll go back to this. Start with large cap tech. Large cap tech, 100%, just like large cap communications, a place that we want to be looking for opportunities. When you go to equal weight tech, though, I think bulls really want to see this one go. And I think being a stock picker gets a lot easier if and when this base makes a clear and clean upside resolution. We're right here. Last week's candle, a little bit spooky, right? We had a couple hammers at this key level. We were like, ooh, nice, some hammer candles right at this former resistance zone. Now we're getting, what do you call this? Shooting star, right? Gravestone doji? I don't know, but ugly candle last week. I think 28 and change really has to hold. That's the August highs, Q1 highs, and equal weight technology. Then there will be more stocks that look better within tech. Next chart, let's do communications. This is what I'm saying, JC. They look very different. I've drawn this chart purposely so that the August and Q1 highs in these two indexes line up. So you could see they were pretty much tracking each other perfectly. Through the downtrend that begins on the left-hand side of the chart, they were basing nicely together, ran up, put in a clean retest of those August highs in Q1 of this year. Then large cap communications went in one direction, resolved higher from this beautiful base, and have been coiling very constructively over the past several months as markets have corrected. Equal weight communications, on the other hand, never able to resolve higher from that base, still in this range, still, you know, in the bottoming process. So again, I think this speaks to something similar as the tech charts where, yes, we do want to look in communications, but selectively. It's going to be the big names. It's the ones that we're talking about.
Which are the stocks that are dominating the one that's doing well?
Meta and Google.
And which stocks do we own?
Meta and Google.
All right.
Because we look at these charts.
No further questions, Your Honor.
Yeah, great. Industrials next. This is another one. I'm only bringing around the ones that look investable. Industrials above those August highs. As long as that's the case, I think you can look there. Equal weight industrials look, you know, rather similar. That's the next chart. And that's really it. Oh, that's equal weight. Where's large cap industrials? Oh, they look exactly the same. I can't even notice the difference.
Well, also remember that the large cap industrials has no stock that represents more than 4% of the index, so it's very diversified, even at the cap level. So
what does this mean, JC? Even discretionary, healthcare, materials, no good. Energy, it's really not the August highs. Energy is just different. Wait for
I'm
that.
gonna push back on that healthcare, bro. I'm gonna push back on that healthcare. It's getting juicy. It's getting juicy.
Healthcare looks terrible. I was looking at it today. RSPH. Ugh. No, thank you. And then I got one more, totally different. John brought up copper. I've been watching copper. What is this? Chart 1 spawns, I think. My copper chart. No, 4 now. 5. Chart 5. Not looking good, but holding on. JC, do you want to tell me why these are not Head and Shoulders reversals? Is there enough to reverse here?
I don't think so.
Yeah.
This looks like a consolidation.
So these pivot lows in copper stocks, that's COPX, the VanEck ETF, or Global X ETF, and then these are copper futures. Clear levels here that you don't want to see break, right?
Let me show you something, young lad.
Show it to me.
Let me show you something. Let me show you just how much healthcare sucks. Hey, why don't you throw up slide 1 so Strazza could tell us
Ozempic and
how terrible
driving the whole
how terrible healthcare is. Whenever in doubt, zoom out, my friend. Why don't you tell me again how much healthcare sucks?
Yeah, I'm not interested. I don't want
it. Nobody else does either over the last couple of years, by the way. Spencer, can you tell me how much this sucks? What do you think?
Terrible.
How many sector charts look like this though? I mean, more than one, right? So why would I buy this over technology? Right?
Spencer, everybody agrees with you.
Healthcare
What?
Healthcare straight lower all year on a relative basis.
Zoom out, my friend.
Straight
Zoom
line
out.
lower.
How come during this correction over the last
know.
couple of years, healthcare's traded sideways?
Healthcare is one of those groups where you really have to be specific about which ones. If you look at the difference, I wish I had the charts between something like IHI, which is medical devices making new multi-year lows.
Yeah, that's right.
And maybe IHF, which is not completing a top, but in fact looks more like a failed top and a lot more like XLV. That's the healthcare providers, the UNHs of the world. Looks a lot better. Then you have biotechs, again, look terrible.
Oh my god! You know what looks terrible? Medical devices.
Just said
Holy
that.
crap!
Just said that.
Oh,
Yeah,
you did?
because
Sorry.
these are part of those like Art Cathy Wood growth names.
No. Well,
Yes.
some of them are.
And then hold on. And then you have PPH, Big Pharma, just basically at new all-time highs because of weight loss drugs. So, I guess there's something there.
Does that mean that investors in pharmaceuticals need to give their profits back?
No, it means that like a very select handful of stocks are driving the gains, and I think that those stocks are vulnerable for those trends to end in an ugly way, if and when that happens. So I don't know. I think it's a tough space to invest in right now. That you have to be really specific about what healthcare stocks.
What about UNH?
Yeah, go for it.
What about J&J?
No, not for me. Too defensive, right? J&J is trading too much like these bond proxy groups right now.
Fair. But UNH is the one.
Yeah.
UNH also making new highs as we speak, the largest component of the Dow Jones Industrial Average, the world's most important stock market index.
So UNH looks fantastic. It looks like it's about to break out literally to new all-time highs after going straight sideways for a year and a half out here.
You mean like the XLV ETF, the one that looks terrible?
Well, there's a reason why XLV looks like UNH.
I know.
Was it 20%? 15?
I'll tell you right now.
It's like 10. I just looked, but no. And to JC's point about the medical, it's like 9.9.
Eli Lilly's 9 also.
Medical devices are not a Cathy thing, just so you know. I'm looking at like Medtronic and Intuitive Surgical. Those are not. Cathy does not own those names. Medtronic has a PE of 14. It's not exactly blowing the roof off the place in terms of growth. So
what's going on with the insurers or the health providers? Like, look at Cigna. Look at these two candles the last 2 days. Is there news driving this? Because it's not just like UNH ripping. They all look really good.
Well, UNH reported earnings on Friday, right?
So sympathy bid for the whole space. Is that what's going on here?
It's very possible. I don't know when Cigna reports.
Let me tell you something. Healthcare is going to make new all-time highs. It's the second largest component of the S&P 500. It's the second largest component of the Dow Jones Industrial Average. It's going to be ripping to new all-time highs, breaking out of a multi-year base. People are going to get all offended that
their
equal weight S&P is not keeping up and blah blah blah, and we got to do this whole thing again.
Yeah, but to Strazza's point, the range of outcomes in healthcare is extremely wide. So why not just drill down and go buy health insurers and just avoid medical devices?
Can't you say that for the S&P 500 too, Mr. Israel?
Sure.
And can you say that for every index?
But we're talking about healthcare.
Are you saying don't own the median healthcare stock, own the leaders?
I like that.
Is that what you're saying?
No. You're saying own the median healthcare stock.
No, I'm saying own the index that's cap weighted.
You know who you could point a finger at instead of the pharmacies in the whole opioid thing? Going back to that.
Here we go.
The insurance.
You want to point a finger at
buy the insurance companies.
Why are you covering these drugs for basic back pain or somebody bumps their knee?
Listen, I don't know anything about that. These insurance stocks look great, bro. So I don't know what to tell you. I don't care.
At the risk of getting my head bitten off here, great idea for a trade right now, since this Bitcoin thing appears to have been fake news. If we know what the market would want to do on an SEC spot Bitcoin approval headline, and the headline that just came through is not real, just buy it. It gave back all its movement just now. Just buy Bitcoin now,
ladies and gentlemen,
and anticipating the actual headline. Right?
Ladies and gentlemen, let this be a lesson. Ignore the news. They are glorified. The news people are glorified gossip columnists. Just because the author of the article went to a Ivy League school doesn't mean that it's not gossip. It's no different than a Kardashian divorce or an NFL trade rumor. It's just gossip. So you went to an Ivy League school and studied journalism. It doesn't make you not a gossip columnist.
Well, Han, if we just saw a Bitcoin SEC Bitcoin ETF approval is worth about $4,000 in Bitcoin. That's what just happened. Okay, then why not buy it now? It's already giving back almost all those gains. Why not just buy it now and wait for the next headline?
Why don't you just continue to avoid it and buy it above 31 like a normal person?
Hey guys,
I don't.
Just fact check.
Yeah, what's up?
UNH, best S&P stock since Obamacare passed. That was a cool narrative and fun for a lot of people for a while, and it was true for a long time. Apple is absolutely kicking their ass. It's not even close anymore. So
Give it time.
Apple is by far the best S&P stock.
Give it time.
Oh, actually, I'm talking about Dow stocks, not S&P. So I don't know. But UNH definitely not the best in the S&P. They're not even the best in the Dow.
Give it time.
What, you think UNH will pass out Apple? What do you? I don't know what you're.
Even if it just gets close, think about the impact that that's going to have on the indexes.
Dude, UNH is not going to pass Apple.
It doesn't have to. Or S&Ps to go to 5,500.
Should UNH just be removed? I'm so tired of every time UNH moves, you got to hear about the Dow, and every time Dow moves,
you sound like one of these old men yelling into the air.
Very irritating.
You know.
It's obnoxious. Like,
you do a quick chart report before recess.
Yeah, very irritating. Oh, UNH moved with the Dow. Really? I wonder why that is. All right, where's my chart report? I don't even know.
JC's being cheeky towards tech.
Yeah. What did tech do to you, man?
He loves them, but he hates them.
What's so great about healthcare all of a sudden? Okay.
What's so great about you? Want me to show that chart? Strazza was just talking about the Dow Jones Industrial Average, kind of like in these one. I thought Ian McMillan's chart was really good, near flat 200-day moving average. Right? You like that one?
Okay, let's find it.
I like that one. That was solid.
Oh wait, I'm way too far down. One sec. Where is it? Do.
A lot of the same chart.
Like the third one.
A lot of these are all the same charts. The S&P.
Yeah.
You on the right day?
Yeah. October 13th, Friday.
Let's just scroll through. Let's just scroll up and down.
Scroll up.
Am I on the right day?
Scroll up.
Wait, I might not be on the right day.
All right. Well, some host you
Am
are.
I?
Yeah, you're on the wrong day, Spencer.
No,
Wake up.
I'm on the wrong
Today
day.
is Monday.
All right.
Today is Monday the 16th.
Oh, my own.
Friday was the 13th. All day it was the 13th. It was Friday the 13th, actually.
Yeah. It's a thing.
Not Friday the 12th.
Yeah.
Come on, Spencer.
All right, here we go.
You had one job.
Nope. Give it a second. God damn it.
Spencer had one job. Seriously.
Oh man. All right. Anyway, as my chart report continues to. So wait, what's the other chart saying? I'll pull it up in 10 seconds.
It was saying what Strazza's saying. I thought that Ian's chart was better than Strazza's. Strazza made his point using several charts, which I liked. But Ian, I thought that this one chart sort of collectively made the same point Strazza was making using multiple charts. I think this is a great chart. Great chart. No? Do you feel offended that I thought that Ian's chart was better than yours?
No, I had a 200-day end of VWAP on mine too. They're all saying the same thing. Yeah, it's a big level.
They're all saying the same thing. What about Ryan Dietrich's chart? Gold continues to push up against that those former highs.
I don't think about it. I don't.
Hey, gold had a hell of a week last week.
It did.
Sorry, Gold. I don't think about you anymore.
Wake me up when gold breaks out. Wake me up when Bitcoin breaks out. All the gossip columnists in the meantime are other people's problem.
He's okay to hang out with.
I was looking at that comment too.
He has his moments.
I'm a good time at lunch. Let's just say.
That's true. All right, should we do
that
some
one?
recess?
You guys will give me that one.
We'll give you that one.
I'm really good at having lunch.
All right, except for today though. Let's do some recess.
Yes, please.
All right. So, listen. I think pumpkin patches are underrated.
Yeah.
Underrated, right?
Sure.
Like when I lived in the city, it was such a novelty to leave the city and go apple picking or go to that horse race in New Jersey right around now. What's that called? The one I never saw any horses, but it's like a big tailgate party.
Anymore. They knocked it down.
Stop.
Wait,
They knocked it down.
What was that like horse race in the fall?
Meadowlands racetrack.
No.
Oh! At the Meadowlands?
No.
No. They've been rebuilding that place forever.
No, it was like
what?
I don't know. That's the only horse track.
You're talking about Freehold?
No.
Freehold Raceway?
No.
Did you go to Highlight too?
You guys are not listening to me. Anyway, there used to be, I think there still is. It's like a giant tailgate party. There's supposedly horses racing. I never saw any. Yeah. Anyway, it was a big deal to leave the city and go do like suburb things. I remember being in the city, like we'd go out to the woods, you know, into our friends' cabins. We're peeing outside. Like it was just, it was such like a novelty. Now that I live in the suburbs, so I used to think that like pumpkin patches and stuff like that was just like a big deal for city folks because we didn't get that sort of thing. Now that I live in the suburbs, taking the kids to the pumpkin patch, the hay rides, bringing the hunt. There we go, the hunt. Is it still around? It used to be a good time. The train ride from the city to the hunt, and more importantly, the train ride home from the hunt to the city was wild. Like crazy. You never went to the hunt? Aren't you from New Jersey?
I've never even heard of it.
What kind of half-ass New Jersey resident are you that you never went to the hunt?
It's in Far Hills. It's not that far away from me. All right.
It's like a thing. It's like a big thing, especially for city folks. Anyway, pumpkin patches, underrated.
No, I'm with you. So like up in the tri-state or especially New England, like that's very much a thing this time of year. You go, you pick some apples, you pick up a pumpkin or two, you get some of the what are those donuts that they usually make at these places, the cider mill like donuts or whatever. They have wineries.
Pumpkin spice donuts, bro.
Yeah.
Woo! Not part of the program.
A lot of these farms also have like wineries too. There's some nice ones up where my parents live in Connecticut.
You don't want to drink that shit.
Yeah, but it's fine. It's just a nice little experience. Nice little afternoon.
You don't want to drink that.
Well, I miss doing those things this time of year. Can we go pumpkin
How is it down in the Keys? They got pumpkins down there or not?
No.
Go fishing. You'll be fine. Yeah. Go get a sloppy Joe. What the hell's that all about? You never had a sloppy Joe.
Never eaten at Sloppy Joe's.
What's wrong with you?
We're making a bucket list because we're thinking about leaving here soon.
Fun fact:
we're making
New Jersey
things to do.
New Jersey has its own sloppy Joe. It's not It's not what you're thinking of. We have a different sandwich that we call a sloppy Joe in New Jersey. It's like cold cuts and coleslaw and Russian dressing. That's a New Jersey sloppy Joe. That's not a.
That sounds yummy too.
Coleslaw.
Yeah, it is good. It's like turkey cheese. I don't know, salami. Cold cuts, whatever, and then coleslaw and Russian dressing. Anyway, I had the omakase experience on Friday. Tremendous. Definitely would recommend that. This is a Japanese. This is a Japanese turban shell. I don't know if you've ever heard of that before. It's basically a snail. It's really big. You can see. I don't know.
It's like Japanese escargot.
Yeah, basically. Anyway. This is the preferred way to eat sushi because if you take the amount of food that we ate and put it in front of me, all at once, it would have been gone in 10, 15 minutes, right? But this is it took us 2 hours, right? It's a 2-hour experience.
It's an experience, right?
Edible experience.
Yeah, it was great.
Fantastic.
Crushed a bottle of sake. I did get the
Junmai Daiginjo.
Daiginjo. Thank you very much. I got that.
They didn't have a good tokubetsu.
Well, I saw. Well, it was BYOB, so I went to the store, and that's the first one that I saw. So I went
Ask the
out.
guy if they have a good tokubetsu. Trust me.
I was a little bit crunch on time, so I ran in, ran out, and I got the Daiginjo, and it was great. So yeah, great experience. Highly recommend. If you have omakase near you, check it out. It was fantastic. Just the quality of the fish, the uni, like, oh my god, the uni, like just tremendous.
Sounds right.
So yeah.
Since we're all talking about food, we've been on a big caviar thing. I just figured out what this stuff was a few months ago, and now I can't stop eating it. I'm like hooked. You can order it on markies.com. They're actually out of South Florida too. And it's pretty reasonably priced, but it's just so fun to eat. And JC, what do you pair with that? It's got to be rosé, sun sparkling. I know traditionally people do vodka, but what if you don't like vodka?
That's caviar?
Yeah.
Champagne, bro.
That's it, right? Okay. I'm getting better at these things. Knew that.
Yeah. With a caviar, I mean, you could do so many different kinds of champagne. You could do a Blanc de Blanc. You could do a nice cuvee. The type of champagne matters less, but sparkling wine. And by the way, let that be a lesson to everybody. If you can't figure out what to pair with it, the answer is champagne because it goes with everything. But in this case, champagne is a classic pairing for caviar and fried chicken.
Yeah. Okay. Totally. We're doing it right then. You get the creme fraiche, you get the little blinis. They're like basically like little baby pancakes.
That's right.
Blast.
Party. You can't get those little baby pancakes because they're tough to find. Cape Cod chips.
Russet chips.
Less salted. Yep. Like if you can find like a 50% salted.
Yes. You don't need the salt.
You don't need the salt.
You get like
from the ocean.
So you get like a dark russet potato chip. And for me, I like the crunch with the chips more than the blinis. So
I asked Perlman once, listen, if I'm eating caviar, is it okay to have the chip? And he said, first of all, you sound like such an asshole. Second of all, if you're eating caviar, the chip you're eating is the least of your concerns.
All right, I'm not going to tell him
on that note
what I've been up to then.
On that note, that's a wrap for us. We got the Flow Show coming up at 11:30 a.m. Eastern Time. Stay tuned for that. Thanks to our guest today, Jon Kolovos. Thanks to Kimmy. Thanks to all of you in our chat. If you want to drop us a like, we'd appreciate that. Hey, give us a follow. We're on all the socials. We're on the Twitter. Subscribe to our YouTube channel, blah, blah, blah. The Gram, all that good stuff. Twitter/X. I don't know what we call that now. Anyway, that's a wrap for us here. Go make some money. Have a good day. We'll see you guys later.
Running.